Hey everyone, it's Dean. Now I've got Josh with me. Now, what is your loan to value ratio, or LVR, as I've heard?
Yep, LVR. It's a common term in any sort of finance.
Demystify it for me. What's it mean?
It's not that mystical, but however. So it's just a basic ratio between what you owe versus what the value of the property, value of the asset is. So for instance, we're talking home loans, just to make it simple. If you buy a property for $1 million and you owe $800,000, then the loan to value ratio is 80%. Okay, because 800 divided by $1 million is 80%. Okay.
And most of the time on a rent roll, it's usually 40% deposit. So is that a 60% LVR, or sometimes
correct.
70?
So the banks will lend up between 60 and 70% depending upon the strength of the deal. So if you're really experienced, some of the banks will go up to 70% on the basis that the loan will decrease back to what they deem as a normal LVR over a 3-year period, being 60%. So they may lend up to, say, if you're acquiring a rent roll for $1 million, they may lend up to $700,000 on the basis that you can demonstrate and fulfill being able to pay it back to $600,000 or 60% within the first 3 years.
Okay, so that's great advice. LVR, cheers.